Ali, are you there, Ali?
A warm welcome to everyone joining us. We're so happy to see you with us today. Before we formally open the session, let us begin with a few house rules. First, if you haven't already changed your login title to name plus organization, you may do so now. Second, please ensure your microphone is on mute until you are selected by the moderator. Third, if you would like to contribute to the discussion, questions and comments can be raised in the chat box, or you may click on the participants icon and select Raise Hand. Please select Lower Hand once you have spoken and your microphone will be muted. Please keep questions short and straightforward to allow more questions from other participants. Fourth, Chinese and Russian channels are available. Participants may opt for their language of preference by clicking on the interpretation icon below their screen. English may be a second language for some of our participants, so we promote the use of slow, clear, and simple communication. We ask that participants and speakers avoid jargon and acronyms, enunciate properly, and practice inclusive language as much as possible. We will have to emphasize that based on past experience, abbreviations can be quite challenging for live translations, so best to avoid them. And if we truly cannot, kindly slow down so that our translators can provide accurate and good quality interpretations. Fifth, in order to ensure that the event can commence on time and take place without any disruption, all participants and speakers are requested to respect the schedule. Should speakers exceed their speaking time, they can expect a gentle prompt from the moderator or the Governance Forum Secretariat. Finally, if you experience any technical problems, please let me or any member of the Governance Secretariat know, and we will do our best to attend to you. Thank you very much, and I now turn you over to our moderator.
Thank you. Good morning, Ali. And well, the friends, good morning, good afternoon, and good night, wherever you are. I am pleased to invite you to participate in an important session dealing with compliance risk management. I'm just speaking slowly, compliance risk management or CRM. Sometimes participants may say simply CRM, but it means compliance risk management. Compliance risk management is a systematic approach to enable revenue authorities to maximize internal resources and to achieve cost-effective administration. The COVID-19 pandemic has adversely affected tax revenue collections as a result of the economic slowdown and individual taxpayers' compliance due to extended deadlines of tax filing and payment, as well as the incapacity of tax bodies to maintain tax enforcement. As tax administration resources are even more restricted in the midst of the pandemic, new challenges in its application have emerged from the pandemic, and compliance risk management is taking a more critical role in securing revenue collections and restoring taxpayers' confidence and compliance. Employing information and communication technology will also make tax administration more efficient and transparent and would supplement the effective implementation of compliance risk management. The objective of this session is to explore how revenue authorities reinforce compliance risk management to safeguard tax revenue collection and tax compliance, to share the experiences that ADB has obtained through its support to developing member countries towards developing compliance risk management, and to discuss how compliance risk management can be re-established and achieved, including through the use of digital technologies in the aftermath of COVID-19 pandemic. Friends, we have a very good panel and speaker to talk about these issues and important issues. We'll start with a very important presentation by Ms. Susan Betts. She is Senior Economist, Revenue Administration Division, Fiscal Affairs Department, IMF, followed by a very strong panel. Ms. Annette Chui is a very renowned tax a tax expert, and she has been working with ADB for quite some time. And my friend Yuji Miyaki, he is public management specialist with the Central and Worcestershire Regional Department, and he will share his personal experience while dealing with compliance risk management in some of our member countries in that region. And finally, very important person, Mr. Robin Young, Assistant Commissioner, Compliance Strategy and Insights Division, Inland Revenue Authority of Singapore. This is going to be very important intervention from Mr. Robin Young. Now, I'd like to request Ms. Bates to start his presentations, and you have 20 minutes for your presentation. Thank you.
Thank you very much, Varanya, for the introduction. And hello, everyone. Today, we're going to talk about high-level CRM concepts. And I guess a note for the interpreters, I will be using the acronym CRM for Compliance Risk Management quite frequently during the presentation. So hopefully that's okay. So we're going to talk about high-level CRM concepts, global developments in CRM, and challenges and opportunities as a result of the COVID pandemic. So if we move to the next slide, I want to talk first about why CRM matters. So first of all, let's think about it from the perspective of the tax administration's objective. At its most basic level, the tax administration collects revenue to enable the government to achieve its social and economic goals. In doing so, the tax administration must protect the tax base from non-compliance, whether that non-compliance is deliberate or unintentional. CRM is what helps the tax administration do this. Without CRM, we wouldn't know what non-compliance was happening, how large a problem it was, nor the underlying reasons for it. So let's talk a bit about what CRM is all about. If you look at the first bullet on the slide, there's 3 elements in that first bullet. First, it's a systematic, repeatable process, and I'll elaborate more on that in a moment. Second, its goal is to identify, manage, and mitigate compliance risks. So essentially, this is defining what the problem is, what are we going to do about it, and then taking action to address the non-compliant behavior. And lastly, CRM is applied across the tax system. As you know, taxpayers have 4 key taxpayer obligations. They have to register when required to do so. They have to file on time. They have to correctly report their tax obligations, and they have to pay on time. You may have heard these described as pillars or domains of compliance. CRM is also a means of driving stronger revenue collection by addressing the highest priority risks to the tax base. And I'm going to talk about this a little bit more later. I should also mention that many countries think CRM is about case selection for audit. So it's much broader than that, which will hopefully be evident to you by the end of the presentation. I've noted some of the benefits of CRM on the slide. A key benefit is that different types of non-compliance are treated differently. How to address non-compliance depends on the reasons for the non-compliance. It could be taxpayer attitudes towards compliance, or it could be a lack of understanding. So how you treat the issue depends on the cause and the magnitude of the problem. This differentiated approach is cost-effective, and it promotes community confidence in the tax system. Ultimately, CRM provides intelligence on where the major compliance risks are in the country's tax system, which allows management to make better decisions on how to address those risks. So now if we move to the next slide, what I've shown here is the OECD CRM process. It's likely quite familiar to you, so I won't go through the model in detail. Just a couple of key notes about the model. It's an 8-step process, and at this point it is accepted practice among tax administrations for managing compliance risks. The key things to remember about the process is that it's systematic, repeatable, and cyclical. So you follow the steps in the same order every time, and you use the process at least annually. It's cyclical because it feeds into the tax administration's decision-making process about how to allocate resources, so that you can achieve the best revenue outcomes for the tax administration. So I'd like to show you now how this CRM process fits into the tax administration overall. So let's look at the next slide. So I call this the CRM Framework, and we developed it to help tax administrations understand how CRM fits into the bigger picture of tax administration. There are two dimensions to the diagram. It has a horizontal aspect in the blue boxes and a vertical aspect with the black boxes, with the OECD 8-step process right in the middle. On the horizontal view, we see inputs to the CRM process and outputs from the CRM process. The vertical view is designed to show how CRM flows from the strategic objectives of the tax administration to the need for good governance over the work, with the result being that the outputs from the CRM process drive the operational workloads of the tax administration. So let's talk about each of these elements individually. The next slide focuses on the inputs to the CRM process. So as you can see, there are 5 that I've listed there. The first is data and data management. In order to conduct analysis about compliance risks, you need data. So if your tax administration doesn't capture significant amounts of tax return data, you can still start with what you have and then build from there. You may need to update the return forms to gather additional information. However, we also sometimes see the opposite, where tax administrations collect a lot of data, but they don't have the IT systems or the analytical skills to effectively use the data. Neither situation is ideal. And so when I talk about data sources, obviously you have the internal tax administration data that you hold on taxpayers. Other government departments can have information that's beneficial to you in evaluating compliance risks. And of course, third parties such as banks. So if you don't have, if you're new in the CRM arena, data matching is one of the easiest things that you can do to start if you're new to CRM. So I'll just give you a couple of quick examples of matching that typically finds quite a lot of non-compliance. The first is comparing the turnover reported for profit tax against the turnover reported for VAT. So often there are many discrepancies when we do this matching process. Some of them may represent legitimate differences, say, for example, due to 0 rating for VAT purposes. So the turnover would be different for VAT versus tax. However, in a lot of cases, it represents non-compliance. Another example, if you compare the customs import data to what's reported for VAT, often this identifies significant non-compliance as well. Now, to allow matching to occur effectively, it's beneficial to have a common taxpayer identifier that's used by all agencies whose data is being matched. So that's an important aspect to think about. Ideally, you would be able to automate this matching process with an IT system that has the right data and programming. Otherwise, some analysis can be done manually, but of course not as efficiently. I've seen many administrations download the data into Excel and compare the data using that software if they don't have the IT capability yet. Another important input into the CRM process is staff capability. And the skill sets that are needed for this CRM work is data analysis, as well as knowledge of the business line potential risks. So when you combine these skill sets together, you'll be able to build a more comprehensive view of the risks in the tax system. Risk practices and tools is the next input. There are different CRM methodologies that can be used. A common model called the risk rating matrix uses an analysis of likelihood and impact, where likelihood represents how often a certain risk may be present in the taxpayer population, and impact is the value of the tax at risk. So combining likelihood and impact provides a sense of the magnitude of the problem, which then dictates how the risk should be treated. I'll get into treatment options more a little bit later. And the last input into the CRM process is the result of a tax gap analysis, if one is available for your administration. Typically, a tax gap analysis identifies the magnitude of the compliance risk, and it often pinpoints the major sectors where non-compliance is occurring. So pulling together all of the 5 inputs that I've just talked about allows the administration to view risk through various lenses, which is helpful when applying the 8-step CRM process. So now if we go to the next slide, let's look at the outputs from the CRM process. And the first is a compliance risk register. This is a management tool that records all the important compliance risks identified by the CRM process in one document. And it also tracks the relative risk ratings of each one of those compliance risks. And this helps management to prioritize what risks need to be addressed first, and in deciding on the treatment strategy for each risk. So the next output is intelligence and profiles and scans. So through the CRM process, you will identify trends and common areas of non-compliance. This intelligence that you've gathered through that analysis can be used throughout the tax administration. For example, sector-specific profiles could be developed to document common areas of risk and tips on how to audit for risk in the sector. Understanding the underlying causes of non-compliant behavior is also a key output of the CRM process. This is about treating the cause, not the symptom. So let me give you a quick example. If a certain type of non-compliance is found to be related to a misunderstanding of the law, then doing more audits to correct non-compliance is not the most cost-effective way to address the problem, nor will it likely promote voluntary compliance. If you identify the specific issue that's causing the confusion and providing information and education on how to comply, that will prevent the problem from occurring in the first place. And that's really the goal of CRM, to treat the non-compliance in the most cost-effective way. Now let's look at compliance improvement plans. With the risks identified and prioritized through the CRM process and management decisions made on the most important risks, the compliance improvement plan is the method used to address how each priority risk will be dealt with. They can be for a specific industry or a specific taxpayer segment, such as the large taxpayer segment. The plan should cover the risk for all the main taxpayer obligations, including registration, filing, correct reporting, and payment. It should also have treatments that range from education to assisted compliance to enforced compliance. So it really is not all about audit. You need to have a broad range of interventions to manage compliance risks effectively. So now if we go to the next slide, let's look at the vertical part of the diagram of the CRM framework to see how it fits into the big picture of tax administration. So at the top, as you can see, it starts with the tax administration goals and objectives, which really should drive everything the tax administration does. Many administrations have mission and vision statements that state what the administration's objectives are and how they intend to carry out their responsibilities. In order to deliver on those objectives, the administration has to structure itself appropriately for efficiency. A dedicated organizational unit to undertake the CRM work is important, as their main focus will be on identifying and validating compliance risks. The CRM team will work closely with the risk owners, which are the teams in charge of registration, audit, filing, and payment. The administration must also put in place a governance process for decision-making. We recommend that you have a CRM committee who's chaired by a senior executive and with members from all functional departments or divisions. This committee will monitor risks and make decisions on which priority risks will be addressed and the resources dedicated to addressing those risks. You'll notice that I added the compliance improvement plan to the vertical diagram. This is meant to emphasize the link between the analysis done as part of the CRM process and the operational workloads that the tax administration undertakes. CRM drives the operational workloads of the tax administration, and this point is key. Otherwise, what is the point of having done the CRM analysis? Having this treatment strategies developed as part of the compliance improvement plan then leads to audit case selection for the important risks, as well as education and assisted compliance initiatives for the lesser risks. Then all of these activities, that once they've been developed, would be carried out by the operational teams in the regions and districts. The last piece of the big picture is monitoring results. Measuring the success of the treatment strategies and adjusting the strategy accordingly is critical. I see many tax administrations that only measure revenue collections. There are several key performance indicators that you should be tracking quarterly, as these will help you spot areas of weak performance quickly so you can address the issue on a timely basis. On the next slide, we're going to talk about global developments in CRM. CRM is a driving force for revenue mobilization, and more so because of the pandemic. As you know, many countries experienced a sharp decline in revenue collections during the pandemic. Revenue mobilization is considered urgent for many countries, not only to restore revenue collections to pre-pandemic levels, but also to grow sustainable revenue streams for the medium term to help the country recover from the pandemic. The path to increased revenue collection is CRM, as it helps ensure your staff resources are focused on supporting voluntary compliance and preventing revenue leakage. We also see a trend in greater data availability and IT capability. This is critical for more advanced CRM approaches, as compliance checks and algorithms can be automated to identify potential areas of non-compliance that simply are not possible manually. In my view, successful CRM approaches begin with segmentation. Segmentation divides the population into groups with similar characteristics, and this helps identify anomalies and potential non-compliance. Many countries are moving to having a separate dedicated large taxpayer office or a large taxpayer program. And this is one example of typical segmentation that we see more and more. Gender is an emerging area of segmentation that can be helpful by designing services and compliance initiatives specifically for businesses operated by women. And the whole purpose of this would be to get them started off right on the right foot with compliance and generating strong voluntary compliance among this group. Centralizing CRM in a dedicated organizational unit is also becoming more commonplace. I see this as a positive development, as it allows the building of a center of expertise over time. Due to the digitalization of many tax administration, there is a need to shift part of the workforce to more knowledge workers. With electronic filing and payment, fewer staff are required for processing returns and payments. And this will allow positions to be freed up to undertake data analysis and other activities to manage compliance. So now let's talk about the challenges and opportunities presented by COVID. The pandemic made delivering the services of a tax administration very difficult, if not impossible, if a country did not have electronic filing and payment options. Many countries are seeing this as an opportunity to advance the digitalization agenda to avoid these challenges in the future. Tax administration should consider implementing e-filing and e-payment if you don't have it, add more digital services, and advance your data analysis capability. The second observation is that managing compliance requires an even more tailored approach than pre-pandemic. For businesses and industries who suffered greatly from the pandemic, using a heavy-handed approach to collect outstanding amounts or to file returns is not recommended. The risk of this approach is that taxpayers will lose trust in the tax system and it will negatively impact future compliance. In my opinion, it's important to allow some flexibility in how taxpayers bring their compliance obligations back up to date. Communication is key, and coming to a common agreement on the timelines for full compliance will bring a good result for both parties. On the other hand, for businesses or industries who thrive during the pandemic, they should be expected to remain compliant. There may even be many new businesses that were started during the pandemic, so there's an opportunity to proactively educate them on how to comply. This is another example of segmentation of the taxpayer population that helps the administration better manage compliance. One of the challenges I often see is inadequate resourcing of the CRM effort. Tax administrations tend to have a singular focus on collecting revenue. They are hesitant to dedicate staff full-time to the CRM effort, as they think it will negatively impact revenue collection. CRM can improve revenues over both the short and long term, so I would encourage you to make the investment in staffing the CRM unit based on your available data and systems capability. And the last point stresses that ultimately what we're trying to achieve is to put in place a plan to rebuild revenues to pre-pandemic levels. That will then allow us to strengthen the administration so that voluntary compliance increases over time and that enforced compliance is well targeted to those who do not intend to comply. So now if we move to the next slide, let's talk about implementation considerations. Now I realize that all of this may sound overwhelming, and I want to reassure you that what I've shown you today is a mature CRM model, and I recognize that it will take some time to achieve this end state. In the meantime, the key is to start. Whatever data you have, whatever tools you have, you can start, even if it's slowly, but you can get started. Then over time, build capacity in the people undertaking this work, improve the IT systems needed to facilitate the work, and make a plan to utilize your data using all available tools. Lastly, I want to emphasize that CRM touches every part of the organization, so it should not be viewed as a standalone activity. Executive oversight, as well as governance through a CRM committee, will help keep the focus where it needs to be, and the leadership team will be able to respond more quickly to emerging risks. So that concludes my presentation, so I'll pass it back to the moderator. Thank you.
Thank you very much. It's a wonderful presentation, very comprehensive. I have a couple of questions, but I'll come back later. Now the time for our very expert panelists to comment. I have some specific issues selected based on your presentation. So I'll start with Ms. Chui, and my not question, my observation is following on the presentation with global perspective on CRM. In this presentation, does the Asia and Pacific region have their specific trends and characteristics in the context of CRM? What is the common challenge that DMCs in this region may encounter when attempting to enhance tax compliance? This is extremely important because we are getting requests from many member countries to help them in data analysis, related point CRM. So I'm just keen to hear from Ms. Chui on your take on this point. Over to you.
Thank you very much, Hiranya. I appreciate your question. I'll start with some observations that we have been able to glean from the International Survey of Revenue Administration, which is conducted now annually of tax administrations in the region as well as across the world. So one of the questions that we ask periodically in the survey is the investment that revenue administrations make in compliance risk management and enterprise-wide risk management frameworks. And it tells us that risk management generally is well accepted across the region as being an area where we should be focusing our efforts. And around 70% of the respondents to the last survey where this question was asked reported having an enterprise-wide risk policy, and over 80% said they had a formal approach to compliance risk management. Unfortunately, we don't delve deeply into the questions, so little is known about the nature of these approaches or how they're being applied by individual revenue bodies across the region. But it is heartening to see that 80% said they have a formal approach to compliance risk management of some sort and working within enterprise-wide risk management policies. Where revenue bodies did report that they had a formal approach to compliance risk management, it was almost always the case that that approach was applied across what Sue referred to as the 4 pillars of compliance: correct registration, on-time filing, correct reporting, and on-time payment. So it's being applied across all requirements, not just correct reporting, which I would suggest 15 years ago may have been more of the focus. So that's good news. Over 1/3 of respondents in the survey also advised that they published the key risk areas that they have identified. Now, 1/3 is not a lot, but it is an increasing number as well. If we look back over the survey life of some time now, it has been gradually creeping up. Now, internationally, we would recommend that revenue administrations do consider publishing the areas that they've identified, their risk areas, things like their focus, for example, on transfer pricing or international profit shifting or shadow economy. Publishing those areas of focus helps in getting community support for the work that the tax administration is doing. It also raises awareness amongst those people participating in the particular risk that perhaps they should be thinking about improving their compliance and seeking some assistance. So publication and providing options to taxpayers about how they can improve their compliance in these focus areas has benefits and flow-on effects for compliance improvement. Most of the revenue bodies surveyed also publish their performance results. So even though they may not publish the actual specific risk areas, they do publish their performance results beyond revenue. So we are seeing an enrichment of the analysis of performance across the region over the period of the survey, which has been going on now for around eight years. So we're starting to get some longitudinal analysis. So just moving to the second part of the question, I'll focus on just a couple of common challenges that I've observed in the region. And perhaps the most significant one is one that Sue also highlighted, which is this shift of compliance focus, compliance improvement focus, from enforcement to a more holistic approach to treating risk. Compliance risk management includes case selection. It's a very important part of tax administration to choose the right cases to examine in detail and to audit and adjust. But if compliance risk management only focuses on case selection, then we've probably failed in our approach. Case selection is a last line of defence. Audit is the last line of defence. When you have to audit someone, they've already done something wrong in most cases, not always. But it does mean that our other measures have failed. If we have to select cases for correction action, then our approach to compliance risk management has actually failed in that taxpayer's situation. A success would be that we prevent that non-compliance further upstream. So good tax administration focuses upstream. It focuses on prevention, starting at the design of the law, building in things that make compliance the more likely path. Things like withholding and reporting regimes that enable detection of omissions. They in themselves improve reporting because taxpayers know you are getting information from third parties and that you will match it and detect the omissions that have been made so they don't make them. So preventing non-compliance, reducing the opportunities through law design, but also through administrative design, through making sure that you're designing your reporting regimes, your tax returns and other reporting to make sure that you are getting the right information you need to be able to analyse whether compliance has likely occurred in that case or not. And also using opportunities to pre-fill or pre-populate tax returns so that taxpayers know their situation. Third-party reporting and withholding is very powerful in supporting that and improving the perception of the likelihood of detection. It's always also making compliance easier. So it is particularly important then that we look at the legislative regimes that our tax administrations are working under to make sure that their legal frameworks actually support their compliance risk management efforts. If they can't gather bulk data from a variety of sources and adjust reporting and withholding requirements to meet modern requirements, then that will really hamper their efforts. Many administrations I work with have lots of access to data, but it's at a unit record or case level. They can get banking data when they're auditing a taxpayer, but they can't get it at the front end in a bulk way to prevent the omissions in the first place. So those are the sorts of simple things that need to be looked at to make sure that your framework at a legislative level supports compliance risk management, and then to shift to your administrative level. Sue talked about the need for a focus on a CRM organisation, to have a compliance risk management unit that specialises in supporting your work and conducting not just case selection and analytics at that level, but also conducting environmental scanning and developing a deeper understanding of the way the system is operating across different important segments, sectors, and other taxpayer populations. So they're just a snapshot of some of the challenges that we all face. And I think I will leave it there, Haranya, just in the interest of time, so that
Yes.
We can give the other speakers their fair allotment. So I'll hand it back to you. Thank you very much.
Very important comments. I'll come back to you if time permits. More I hear about it from Ms. Bates, from you, more questions come to my mind. So I'll come back to, because I'm a practitioner from ADB side and we have to help our member countries. Anyway, I now go back to my colleague for many years, Mr. Miyake, to talk about his experience while dealing with essentially what I'm going to ask, what is his experience while dealing with this particular problem or issues or challenges in Central and West Asian regional countries. How do you think ADB can support DMCs to reinforce CRM for the tax efficiency improvement? What are the priority areas where ADB should really invest and help the DMCs? Yuji, over to you.
Thank you, Hiraya, and hello, everyone. So I will talk about ADB experience in supporting DMCs in Central and West Asia to improve compliance risk management, looking at following 5 areas. The first one is reducing the cash and shadow economy. The second, improving tax audit skills. The third is improving tax law design. And the fourth, better ICT support for tax administration. And fifth, making it easier to comply. Start by the first issue on reducing the cash for shadow economies. Despite the shift from command to market economies, the informal sectors in the Central and West Asia countries has proved remarkably persistent, with significant implications for policies in areas as diverse as social welfare, taxation, business development, and the studies have shown that high level of tax complexities, weak or inefficient tax enforcement, and lack of incentives to formalize business transactions and make payments through formal banking channels are among the factors affecting the level of informalities. Another important factor is the level of trust taxpayers have in government. In this regard, tax code in Azerbaijan has been recently reviewed, and reforms introduced to encourage tax compliance include incentives for citizens to be employed in formal sector through higher threshold for income tax. It is anticipated that the shadow economy will be reduced, level of informal employment decrease, economic and business activities increase, and especially in private segment of non-oil sectors, and citizens' rights will be protected more. So this tax reform also includes simplified tax procedures, measures to encourage non-cash transactions, such as VAT refund and reduced income and profit tax rate on sales transactions that use the banking system. The second issue is improving tax audit skills. Continuing the Azerbaijan's case, the design of verification and audit programs is now consistent with international good practice. Also, some areas are not yet operating in ways consistent with the design intent. National verification strategy is under development. Verification activities are based on risk assessment using automated process and data matching, and case selection is centralized. However, selection algorithms are still in the very early stage of development. Further enhancement will be required to strengthen revenue result. The focus will be on high-quality audit case selections, as well as improved audit case management to support revenue result. Planned enhancement include the development and use of industry benchmark and industry-specific audit methodologies, where record keeping by the taxpayer were not reliable. Indirect audit methodology can be used, such as tax assessment based on bank deposits or increases in net wealth. Greater use of education and sanction to improve record keeping may also be beneficial, such as issuing a new small business record keeping template. The third issue is improving tax law design. The law in some of DMCs in Central and West Asia is not sufficiently flexible to allow administrators to adapt to emerging compliance risk. For example, tax code in Kyrgyz Republic was recently reviewed for the first time in 11 years. With the new code coming into effect on the 1st January next year, ADB can assist DMCs review their tax laws to ensure it permits efficient compliance management. For example, in the new Kyrgyz Republic tax code, the tax authority can apply risk factors, stating 7 risk factors that must be considered, but list is not exhaustive. This practice emerged, such as in the digital economies. My fourth issue is better ICT support for tax administration. In some countries in the Central and West Asia, the level of ICT support for tax administration, including the use of e-tax portals for filing, payment, and inquiries, could be improved to make it easier for compliant taxpayers to meet their tax obligations, so that resources can be directed toward high-risk taxpayers. Continuing the case study of the review of the tax code in the Kyrgyz Republic, TA provided by the ADB, we can assist the tax authority in ICT change by documenting new business process and preparing business specifications. ICT changes can include using a portal to receive VAT refund applications, using a risk engine to apply risk rating to refund claims. Then, after the processing, to advise the taxpayer of the outcome of their applications and to pay the refund through an interface with the banking systems. The fifth issue is making it easier to comply. Small and medium enterprises, or SMEs, are widely recognized as important drivers of job creation, innovations, and economic growth. but they also face significant tax challenges. They tend to be disproportionately impacted by red tape and thus placed at the competitive disadvantage disadvantage to the large firms. The high compliance cost and complexity of the tax system may act as a deterrent for the SME to move for the formal economy. From the perspective of tax administration, allocating scarce resources to taxing high volumes of low return small taxpayers also raise efficiency concerns. Recognizing this, DMCs in Central and West Asia have adopted presumptive small business tax regimes. Under the presumptive tax, an SME is assessed for income tax by tax authority at a standard industry rate. This promotes voluntary compliance while keeping the administrative cost of dealing with the small taxpayers at a minimum. In Armenia, the significant lower tax burdens in the presumptive tax regimes, combined with the simplified tax reporting and filing requirements, created an unintended consequence. The larger companies use tax avoidance techniques, such as splitting one entity into several to reduce each of smaller entities' turnovers, which are small enough to fall into the presumptive tax regimes and pay lower tax. So the low level of documentation and soft administration in the presumptive systems also made it difficult for tax authority to assess the real volumes of turnovers of economic entities operating in this system. So this is also allows the economic entities to hide their sales revenue and unduly remain in the presumptive tax systems. TA provided by the ADB is supporting Armenia to review the design of its presumptive tax regimes to overcome this tax avoidance and techniques. This will bring the tax paid by SMEs more in line with that paid by the entity in the general tax systems and increase the government revenues. Finally, I would like to emphasize that the taxpayer compliance is affected by the sense of fairness, and it can be encouraged by the government action to combat corruption and tax evasions, issues that have been heightened by disclosures in the Pandora papers in relation to prominent figures in Central and West Asia. ADB has ongoing projects to support international tax corporations in many countries through promoting exchange of information between countries to prevent tax avoidance and avoidance by large companies operating across borders. ADB will continue to support DMCs to improve their capacity to mobilize domestic revenues through more efficient, effective tax laws, ICTs, audit methodologies, and better skilled tax officials. Thank you very much for your attention. And with that, I'm back to you, Hiranya. Thank you very much.
Thank you very much, Yuji. Learned quite a lot. I know that you are very active in Armenia and Azerbaijan. So very important interventions from ADB. Now, finally, I'm coming back to Mr. Robin Young. Very important. I'm looking forward to hear what does he say about Singapore experience. Briefly share with your experience in CRM compliance risk management. Let me repeat it again, including benefits, challenges, and the main driver in its application. In particular, how can governments leverage digital technologies such as data analysis and behavioral insights in their CRM? Very important, this last part, digital technologies, how the DMCs can utilize that. Thank you. Over to you, Mr. Robin Young.
Right. Thank you. Thank you very much, Hiranya. Perhaps let me start by saying that, painting some context. So I think in Singapore, we are quite fortunate in that we generally have very high rates of compliance, whether it's registration, reporting, payment, and things like that. Now, having said that, one very key philosophy that has guided us all these years is that we firmly believe that being able to maximize voluntary compliance is the only sustainable means for us to achieve overall efficiency as well as effectiveness of tax administration in the long run. The way we manage compliance is guided by two key beliefs. Number one, we believe in fostering an environment that makes it easy for taxpayers to comply and very hard not to comply, right? The second belief is also very important. We believe that taxpayers are actually generally compliant. So if you imagine an upside down pyramid, right, the compliant taxpayers are actually at the top. Most of them are actually compliant. Then as you move down this upside down pyramid, you have the negligent or the ignorant taxpayers, right? Then you have the errant ones and you have the delinquent ones, the hardcore delinquents. So we have actually calibrated our compliance approach according to these different segments. You take a different approach depending on the type of the compliance behavior of the taxpayers you're dealing with, right? Our compliance or CRM process is actually very identical to the framework that Ms. Susan Betts has presented just now, right? It is a cyclical, systematic and process that we do almost annually, where we look at different trends, identify different compliance risks, whether they're emerging risks, whether they're current risks. We have a central team that manages CRM. It's a very small team, but we do have that very important role to basically oversee compliance strategies as well as compliance policies and compliance approaches for the whole tax administration. What we do in the central team here, which is actually under my purview, is that we work very closely with the various business divisions to basically identify all these compliance risks, evaluate, assess them, prioritize them, and then collectively we decide which are the key areas of risks that we will have to focus on for the next 1 year, next 2 years, next 3 years, even, right? And and like what I think the Ms. Susan Betts as well as Annette has shared, you basically identify risks based on the different pillars, whether they are reporting risks, whether they are filing, payment, or registration risks. And you look at different segments, and from there you basically formulate a compliance improvement work plan, so to speak. So that's what we do, right? And we also have a central steering committee, which is chaired by 2 deputy commissioners to oversee the entire compliance process. So basically what we do is that almost on an annual basis, we get together, we work with the various business divisions, look at the risk register that we have, look at all the environment scanning that we have done. We come together, we look at we look at all the risks, we prioritize them, and then we agree on a work plan. And once that work plan is agreed, that goes into the various business units operational work plans, right? So and basically that's how we merge the compliance process as well as the operational corporate work plan, so to speak, together. And then, of course, as the work plan goes, we make sure that there is a proper monitoring and measurement. We have an annual compliance scorecard that we use to measure the effectiveness of our compliance improvement work plans. And this scorecard tells us how well we are doing, where are the gaps that we can do better. And then that goes again into the as part of one of the inputs to the next cycle of the compliance planning process. So in gist, that is quite broadly how we manage compliance risk management. I mean, the process of managing compliance risk management in Singapore. Now, in terms of guiding the way we manage compliance risks, we very much subscribe to this principle of moving compliance upstream, right? So definitely, for sure, compliance is not just about audits. It's not just about enforcement. And our approach is one where we believe that service and compliance actually goes hand in hand. And to that extent, what we have over here in Singapore in IRAS is what we call an integrated compliance and service framework. This framework actually guides us in terms of how we look at risks, how we look at what are the kind of work plans that we want to take up, we want to embark on, and basically how we design all these different activities that we go about to basically prevent compliance issues from happening in the first place, or to basically allow us to take firm actions when compliance issues do arise, right? And I will just very briefly touch on this integrated compliance and service framework that we have. It's about 4 rights. The first right is right design from the start. Basically, what this means is that design your tax policies, tax rules, tax processes to be simple, clear, intuitive, so that they are easy to understand. And in a way, I guess that gives rise to less room for interpretation errors, less room for administration errors, in fact, right? And the second key thing here is that as far as possible, because we are moving things upstream and you want to design things right from the start, you want to make things easy for the taxpayers to comply. The key thing to do it is you need to tap into the live events. You need to tap into their natural systems that they use. They are using, for example, they're using certain accounting software in the course of conducting their business. How can they make use of tapping on that software that they're using to get the data you need? To that help them use the software that they're using day to day to even fulfill their tax obligations, to file their taxes, to make payments even, right? So this is the whole philosophy of right design from the start, basically knowing what are the pain points of the taxpayers, of your taxpayers, and then knowing what kind of services they need, and then you design the services that meet their needs. So that brings me to the second right, basically having the right services to meet their needs. Here, this is where I guess, which I will touch a little bit on later on, is how do you make use of data? How do you make use of design thinking? How do you make use of behavioral insights to identify exactly what kind of services the taxpayers want, how to make the services easily accessible, how to make it intuitive, how to make it even personalized, right? Such that it makes it a breeze for them to fulfill or to file their taxes, file their returns, make payments, so to speak. And not only that, other than knowing what services to deliver, you need to know when to carry out interventions to prevent compliance issues from happening. So this is where you make use of data to identify perhaps different usage patterns of taxpayers, different risk behaviors, and then you design how the level of information that you provide to the taxpayer, the kind of services that you deliver to the taxpayer. So that's the right services, the second right. The third right is right actions at the right time. So this is where perhaps compliance issues have cropped up and you need to take firm deterrent actions. So the key here is that knowing when to detect, knowing how to detect that issues have occurred, compliance problems have occurred, and knowing how to take effective, timely, and calibrated compliance actions against the taxpayers so that you maintain the trust and the confidence in the tax system. The fourth right is about the right tax paying values. So I mentioned about going upstream. So this is really going upstream where we are looking at even how to work with the tax community to shape societal norms about positive values of tax paying. So some of the things we do, in fact, what we do is that we publicize some of those, for example, investigation cases or fraud cases. Basically, that sends a very strong message that when it comes to fraud, we take a zero tolerance approach. In fact, we also started working with youths and maybe even young adults who have just entered the workforce. So what we do is that we start to engage them, start to basically work with them to help create awareness about their tax obligations early, so that you shape their compliance attitudes at a very early stage, so that they will understand the importance of taxes. Why is it that they are paying taxes? And then and through that, I think if you have their buy-in, if you have their yeah, basically the buy-in, I think they are more willing to be voluntary compliant. So in a nutshell, these are the 4 rights that we are doing. Then I guess how we use technology, data, and even design and BI, we basically take a holistic approach.
Sorry to disturb you. You have 2
Yeah.
minutes. 2 minutes.
Sure. Let me wrap it up in 2 minutes. So we actually combine the use of data, technology, design, and BI. We call it a very human-centric way to solve problems. So we use design to understand what the taxpayer pain points, but needs, so that you use data to basically you collect data to understand taxpayer attributes, preferences. We also use collect data as much as possible from source, directly from source. So that minimizes the need for taxpayers to fill in the tax returns. So you collect from source, you pre-fill the tax returns, it minimizes errors. And then you use BI, for example, to nudge taxpayers' behavior. In correspondences, you decide how you want to word your content such that you have a very clear call to action that is very clear to the taxpayers what they should do. Should they be paying up by a certain date, so on and so forth. And we also apply BI concepts on our website, basically to help us understand how best can we present information in a very simple, intuitive manner, such that it's easy for them to understand and follow the tax policies, the tax rules, and tax processes. So yeah, and I guess the other bit of technology is that increasingly, I think we are tapping into using accounting software rather than developing our own digital services. Increasingly, we are looking at how can we work with software vendors to basically have that software incorporate some of these tax features, such that all these information that is required for filing, return and tax submission is all there, which is mostly there in the software, can be easily submitted to the tax administration in 1 or 2 clicks. So I think these are some of the key things that we have been doing, combining the use of different disciplines, technology, design, behavioral insights, as well as data, to help us deliver better services, to help us better identify fraud, to help us better to identify high risk or risky cases for audits, and things like that. So yeah, so I think in short, that is our experience of how we have actually managed compliance risk here in Singapore. Over to you, Hiranya.
Thank you very, very much. It's a very powerful presentation. I think personally, I will come back to Ms. Bates for her final comments before you open up for question and answer session. But I personally feel the main takeaway from the main presentation, then Ms. Chui's comments, and then your comments, Mr. Robin, that it is primarily to tell the audience that it is upstream interventions through a compliance improvement plan. That is very critical, as you said very correctly, and it has come out in presentations and comments from other panelists. It's not that, as she said, selection of cases for audit is the last line of defense, and it is not very cost effective. The more cost effective way is to do, as you said, Mr. Robin Young, to intervene upstream to a very comprehensive compliance improvement plan. Now, over to you, Ms. Bates, if you want to have some comments based on our panelists' discussions and observations, issues. Over to you, Ms. Bates.
Thank you. Very interesting comments from the panelists. So thanks very much for those. And Robin, the comment you made about the right tax paying values really struck a chord with me. I think you're right on point with that. It is a long-term objective, but in the long term, you will get really good dividends, I think, from teaching kids at a younger age about the value and what the purpose of paying taxes is, and sort of bring that attitude towards doing the right thing for your country. So that obviously you've done a lot of work in Singapore around the CRM work, and you're obviously at a very advanced stage. So well done. A couple things that struck me in Miyake's presentation. You talked about reducing the cash economy, and the approach when you're trying to address a cash economy is going to be very different compared to the approach you would use if you're trying to increase the compliance of, say, the large taxpayer segment. Large taxpayer segment, you have a small number of taxpayers, but together they represent a huge portion of the tax administration's revenue base. So, but because there are a few of them, you can have a much more sort of one-on-one type of approach to help to manage their compliance. Compare that then to the cash economy, where you have a lot of taxpayers, and individually their non-compliance might be very small in terms of value, but collectively it could be huge. So the problem is, how do you address how do you manage the compliance of that group? And so you have to use one-to-many approaches in that situation. So how can you reach a whole group of taxpayers and push them towards the compliant end of the spectrum, so that you can avoid having to do so many audits? Because as Haranya just said, audit is your most expensive intervention, and you do want to try everything else first and leave the audit only for the taxpayers that are the most non-compliant. So for cash economy, we think about working with industry associations or letter writing campaigns where you talk about, well, this is the standard in your area, or these are common areas that you would typically find, and invite them to maybe self-correct the returns. So it's sort of an in-between measure that you can use. I was also very interested with your comments on the presumptive small business regime. So just a couple of comments, what we've seen in other countries. As long as they stay in the presumptive regime, it's quite easy. But when they then need to move into the regular tax system, they typically have a little bit of struggles. First, you might have non-compliance around the threshold of when you move out of the presumptive into the regular tax system, and also their knowledge is not necessarily up to par to participate in the progressive tax system, and they sometimes have difficulty with reporting. So that's a few things to just keep in mind in terms of presumptive. Yes, makes it very easy for them, but if they then have to shift to the more mainstream taxation, they could have some difficulty. So you would have to sort of up your educational efforts, I think, to help them through that. And Annette made some really good comments about the legal framework that I think are very important. Reducing the opportunity but also making sure you have the right tools in your toolkit to address whatever non-compliance you do find. So if I don't know how much time I had, but that's
I just want to leave some time for
yes,
questions from the participants.
That's a few observations from my part. Thank you.
Okay, I'll just now leave it for the participant, but I will take the advantage of my position to ask you a question. I don't know who could answer this. It could be Annette, could be Mr. Young or Susan yourself. Now, suppose we get a request from a country, a small developing member country, to please come and help us for compliance risk management, to improve compliance risk management. Now, what do you suggest? When we go there, shall we first make an effort to prepare a compliance improvement plan? Compliance improvement plan, if I've understood correctly, it's not a static plan. The plan will change at different phases of development of compliance risk management. But shall we then first prepare to start our intervention in that country with a preliminary or the early compliance improvement plan, which will cover, of course, many issues like data, tax laws, actual compliance procedure, as Mr. Young explained. What is your take on that, Ms. Bates?
I think first it's important to understand your taxpayer population, because I think you're looking for the answer before you understand what the problem is. So I think the whole, as part of the 8-step process, first part is the operating context, and understanding your population is key to that as well. So I think that would be your first step. But if you were going out to advise a small administration who had not started CRM yet, I think you have to look at the entire gamut of tax administration. So, you know, what are their people skills around compliance risk management? What's their legislative framework look like? Is that correct? Like every aspect of tax administration, as I mentioned in my, like CRM touches all parts. What are the skill sets that you need, and compare those to what you have? What organizational structure do you have? How are you organized for, say, the various segments? So all of that needs to be looked at. And then I think, because the institution has to be ready to undertake the CRM work before you can actually come out with a good compliance improvement plan. And then understanding your population, and then probably testing some risk hypotheses. And then after that, you would probably develop your compliance improvement plan, but others may want to jump in as well.
Annette, you want to say something, Annette?
Yeah, thank you. I agree with everything that Sue has said. You need to understand the landscape first, and understand what the organisation can lawfully do and what they can do within their administration's capabilities. It sometimes is helpful, though, in having done that, to pick a priority area that you can pilot your approaches in. And developing a compliance improvement plan for a pilot segment or sector or risk can really help you to tease out the capability building that will be needed in order to support a fully blown CRM. So often the compliance improvement plan is early in the process as a pilot in a particular area, but it can't be the start of the process. I agree with what Sue says. You need to go back a couple of steps and understand the landscape that you're working in and what is possible. It could be that you need to actually fix some fundamental issues first before you can move to piloting. But my view is always that get your hands dirty early is the best way to learn. And doing that in a small, safe pilot environment is always easier than trying to do it in a full-blown way. And it provides you with some of the evidence you might need then to convince your policymakers, your decision makers, your ministry who are going to give you funding to help build capability, because you've got a little proven recipe here that you've had a go at in a confined area, and it helps you to convince the skeptics that this compliance risk management stuff might actually work. That's my take on it.
Let me open up if there are any other issues, questions from the participants. If time permits, I may come back again, but let me see if there are other issues, questions from participants. Please, yeah, go, Karin, go ahead. Go wants to ask a question. Go, please go ahead.
Yes, thank you. Thank you, Ms. Betts and all parents for their very interesting discussion. I have one question about the importance of communication with taxpayers. I think that was highlighted a couple of times in your speech and the presentation. So I think in order to increase the revenue, the trust of the tax policy and administration is very important. And in that regard, communication is very important. So my question is, how CRM approach, application and implementation of CRM approach can promote the communication with the taxpayers? So that's my question. Thank you.
I think Robin will be the right person because they face this problem. So Robin, can you answer Go's question?
Okay, so I will answer this question this way. I think in everything we do, we are increasingly in a world where the taxpayers demand a lot of information from the tax authorities. So I guess whether it's compliance risk management or whether it's even in the daily course of your work, I think communication is a very important piece of work that we will have to carry out with the taxpayers. I will even go to one step further and say that I think increasingly you need to co-create with your taxpayers, right? So basically, whether it's just part of your service delivery, when you are thinking about a new service, a new product, talk to your taxpayers, understand what they want, understand what they need, so that you minimize delivering things that don't work or don't meet their needs. And the moment that happens, all your compliance issues starts cropping up. Now, if I move into compliance, I think even during audits, I think it makes a lot of sense. For instance, even if I want to commence an audit, I think there's nothing stopping us from saying, let's talk to the auditee first. Let's have a clear understanding about what's the scope of audit, so that there's clear expectation on each other's end that for example, what is the tax examination looking for, and what is the role and responsibility of the auditee in that particular audit session. So I think communication is important in so many ways, right? And I can even bring about mention things like, all the engagements that we've done with people who are not even in the tax net, right? The students, the youth, start early, start your communication early. Basically, I think the more you do in terms of creating the awareness about taxation,
yes.
Understanding the importance of taxation, letting them know what is your intention of this particular engagement or this particular audit or whatever that is, I think it helps. It helps to establish that connection. It helps to establish understanding, the confidence, the trust. And once you have that, I think the compliance will come along. Yeah.
I just have a question to UG. UG, what is your take on that? I used to work also in the Central and West Asia region. That, of course, language was not very easy for me, but what is your take on that? Do they have a good communication system? Because as Go pointed out, as Robin said, I personally think it is extremely important, not just communicating with as Robin said very correctly, not just communicating well and communicating in advance with your taxpayers, communicating with your officials, communicating with everybody, including at the young age, university level. What is your take on that, UG, in your region?
Thank you, Hiranya. It's very important questions. And for the all presentation agreed for the importance of voluntary compliance. In such areas, it is important to provide better taxpayer service to the all taxpayers. But this is not for the one fit to all countries, because this is different by countries. Then so the importance is that for the user-centered design of taxpayer service. So that is quickly and appropriately to respond to the taxpayers' demand and request and the necessary information to provide. So in terms of that, so we are supporting for the user-centered design for the taxpayer service. So this is particularly for the Annette is leading for this work, and this is expected from the government. So, but unfortunately, it was not so much effectively to be implemented. So this is still our challenge, but we recognize this importance. Thank you.
Unfortunately, I never realized that I have to leave this session with so many unresolved issues and questions, but time is not with us. But I am really feeling bad that if I knew this, I would have planned a 2 hours or maybe 2.5 hour session, because so many issues. But still, I can still take another 5 minutes to go back to this issue of when we start intervening in it, because this is extremely, please carry on with your recording. Extremely important for us to understand from the very renowned panelists, when you start our intervention in a country, what is the way we should start? And as Annette has said, area is very important. Many understand your domain. You have to understand the country, true. But so from the country experience, I just need to know again, it is important to reiterate the question that when you see, because basically, Ms. Bates, when you look at the many countries, small countries, medium countries, how do we really start? Just as Annette said, it's maybe good to start with a performance compliance improvement plan for a pilot area. What do you suggest? I want to hear from you, Ms. Bates.
I think one of the top segments that you'd probably start with is the large taxpayer segment, because of its important contribution to the total revenue collection of any tax administration. So I think I would suggest starting there, and I would develop a program around first understanding that large taxpayer population. How much are they contributing? If you divide them into industries, what does that population look like? Look for anomalies. So if you're just starting CRM and you start with large, it's a small number of taxpayers. So I think you can do some additional segmentation and then start looking for outliers in the data in terms of some of the financial ratios and stuff and so forth that would be in with those taxpayers in the same industry. And from there, I think you can then apply the model that we talked about, the risk rating matrix, the consequence and likelihood model, and give them sort of a relative score, all the different taxpayers within the large population. And from there, you can decide what treatment strategies you'd want to try for the risk rating that you've assigned to them for the pillars of compliance. So, and you know, Annette's point was a good one. Starts like, try something, see how it works. If it doesn't work, try something else. So I think that's a good common sense. You can start on a small scale. In other sectors, I would probably start with asking the folks that work there, what do you think the risks are in your population? What have you been finding when you've done audits? And from there, you can develop a few risk hypotheses and then test them out through pilot projects the same way that Annette had said. So I think that the intelligence from the administration itself can get you started as well.
So Rachna has posted a question for Ms. Bates. This is a very important question. Can you read it? Can you see that, or you want me to read it out for you? Rachna is our colleague. Revenue mobilization at the subnational and local government level has become more important than ever after COVID-19, as subnational governments were at the forefront in providing necessary support to contain the pandemic, as well as in providing relief measures. The dependence of subnational governments on the national or central governments for funding can be reduced by increasing the revenue mobilization at the subnational level. Given the weak institutional capacity and political economy issues at the subnational level, subnational government level, how could CRM and overall revenue mobilization be improved?
That's a very good question. I think, I mean, the CRM principles still will apply no matter which level of government that you're in. So I think, I guess, are you asking whether, I think support from development agencies would be, I think, helpful in that situation. So I'm not sure how possible that is, or whether you can only get support at the national level. But there's various, like we're at the IMF, we're developing some online course material. So things like that will be available in the next year or so, that staff can take the courses online, and like there'll be a course on compliance risk management. So anybody at the subnational government level could take those courses and then try to apply them. So there's development partners, there's online courses, there's written technical notes and so on. So all of those are resources that you can use. Now, in terms of the capacity, that is something that does take some time to build. And it's not quite as easy to develop that through courses, as it's much easier sort of on the job training, so to speak. So I I would suggest that if it's possible to get development partner support, that you try to avail yourself of that.
I'll
know if
request
anybody-
Rachna to carry on offline discussion with you, Annette, just last question before I conclude this session to Robin or anyone. Is there any standard software available that, suppose hypothetically, I have a beautiful data set. My standard software can help. There is a standard software the countries my DMCs can use to get various reports, cases for audit and everything. Robin?
My short answer is probably no. I guess it really depends on your specific business case and use case, and you would have to find what would be the most, I would say, cost-effective kind of a tool that you can use to meet the business case. I mean, that's what I believe in. That there's no one standard, but I guess it's about how you make the best use of what you have and what is available in your country or in your market that meet your needs.
So suppose I come and ask you, can you give us your software? That Singapore government will be ready to share the software with another DMC, ADB DMC. Of course, we may need some customization, but is this your own software?
No. We are also using, I mean, for analytics and things like, we are also using what is available commercially, like your SAS, your Hadoop, and all those. Yeah, so it's basically leveraging on open technology, Microsoft technologies, in fact.
Any Ms. Bates or Annette, is there any software for compliance risk management exclusively dedicated for the purpose of preparing compliance improvement plan, selection of cases based on data, third-party information?
As Robin has just mentioned, there's a lot of open source software that is widely used around the world by tax administrations in conducting case selection work. The software is, in fact, not the biggest challenge because you can often get that for free, as Robin has told us. But the bigger challenge is setting the parameters within the software. And revenue administrations will often share on a bilateral basis the types of matters that they consider in setting the parameters or developing the algorithms, as we used to say, for defining risk in tax files. But they'd be rarely likely to publish that more broadly for obvious reasons. Many tax administrations, including Singapore, Australia, the United States, Canada, at a bilateral level, have helped developing countries to use the open source software that's available and the data that they have within their tax return databases to start case selection methodologies and to set a basic set of parameters and start to test them. So that sort of help is often shared organisation to organisation, but it's not the software. It's the thinking that goes into setting the rules. That's the challenge.
Unfortunately, I have to conclude these sessions. It's extremely interesting and helpful sessions, but I have to say goodbye and conclude this session discussion. But I'll request anybody has any question, you can always discuss offline with Ms. Bates, Annette, Robin, Yuji, all are available. So thank you very, very much for this contributing to this wonderful session.